of the top 100 listed companies in Bursa were already doing sustainability assurance voluntarily. And that was a big increase from 21% in 2023. And I'm sure when a report comes out for 2025, we will see an even bigger jump. But we can see that the regulators are moving more towards mandatory assurance to put sustainability on a par with financial reporting. And you can see some examples here where the EU has already mandated limited assurance under the CSRD. So they've already done that since last year. 2024 reports. In fact, they wanted to mandate reasonable assurance by 2028, but they backtracked on that because of the EU omnibus. So at the moment, it's just limited assurance. New Zealand, the same thing, but theirs is looking at carbon emissions. India wants limited assurance of the ESG disclosures for the top 150 companies. So you can see different jurisdictions have different requirements. So here in Malaysia, as I pointed out earlier, we require reasonable assurance of Scope 1 and 2 emissions commencing in 2027 for Tier 1 companies. And then, of course, they'll progress to Tier 2 and to Tier 3 companies after that. Now, of course, there is a difference between limited assurance and reasonable assurance. Limited assurance is giving a lower level of confidence in the information that is being produced, and the kind of work that is being done in terms of the assurance work relies quite extensively on evidence from, for example, management representations and so on. Whereas reasonable assurance means you really have to get very solid evidence in terms of third-party information, in terms of reworking calculations and so on. So it's there's much more confidence in the report that would be reduced from a reasonable assurance engagement. Now, in terms of the standards that we use for sustainability assurance, traditionally, many of these have been around for a long time. For example, you have the AA1000 has been around since the 1990s, and then we have the ISA E3000, which is being used by the accounting profession for some time, and of course ISO has one as well. But now we're moving to this new standard, which is the ISA 5000. This standard was produced by the accounting profession, was produced by the International Auditing and Assurance Standards Board, but it is referred to as a profession agnostic standard. So it can be used by accountants as well as non-accountants, i.e. those people who are in the business, environment, ecology, whatever, who are actually in the business of certification and so on. They can also use this standard when they are carrying out assurance engagements. So this leads us to looking at what's happening in Malaysia in this regard. We are adopting ISA 5000, and as a result of this, there's been a public consultation by the Committee on Sustainability Reporting, the Advisory Committee in Malaysia. The public consultation is going on currently, and some of the things that they want to look at is the adoption of ISA 5000 and also the International Standard on Quality Management, as well as the International Ethics Standard on Sustainability Assurance. These are all produced by the accounting profession, but they want to adopt this here in Malaysia. And then, of course, they want to consider who can be a sustainability report assurer. What kind of qualifications should they have? What kind of professional certification and experience and so on, as well as who should be regulating them. At the moment, we know financial statement audit, there's oversight by the Audit Oversight Board here in Malaysia. They will review all the firms that are carrying out financial statement audit. So it's something similar to that for sustainability assurance engagements as well. And one of the things that they've been asking in this public consultation is about when should we bring in reasonable assurance? And they're even not just on Scope 1 and 2, but they're also talking about looking at IFRS S1 content, looking at governance, strategy, and so on, and having assurance carried out on that, and talking about what timeline for the introduction of sustainability assurance on that. So in the UK, we have, in the EU, I know the EU has caused much consternation over the last couple of years with the issuance of so many directives as a result of their green, they were trying to green the EU economy. As you know, the EU constitutes 27 countries, and whatever legislation is produced at the European Commission and the European Council and the European Parliament level is normally written into local legislation for each, or national legislation for each of those countries. So there has been a whole flurry of activity over the last couple of years when it comes to sustainability reporting. We have the Corporate Sustainability Reporting Directive, we have the Corporate Sustainability Due Diligence Directive, with CBAM, we have now the EU deforestation rules and so on, regulations. So this caused a lot of consternation for companies because many companies were trapped under these directives. So, for example, under the CSRD, you only needed to have 40 million euro revenue to be trapped under this directive. So it meant that the reporting became quite onerous. So there was a lot of pushback from various countries. So the EU decided to do a simplification process of many of these directives, and that simplification process is ongoing at the moment. For example, for the CSRD, this is what the ESRS is under. They're now talking about reducing the content of the ESRS by 2/3. EFRAG is looking at that at the moment. CBAM is being pushed back, by another year to 2027, and there's something like 200,000 companies that are being removed from having to report under CBAM. And now you only have to report if you are importing 50 tons of a particular item from another jurisdiction. If it's above 50 and above, then you will have to start reporting under CBAM. If not, then you don't have to. So it's actually removing a lot of the work that many companies thought they would have to do. EUDR is coming in at the end of December, but there's a lot of changes with regard to, due diligence. For example, previously you had to have a due diligence statement for every transaction. Now it's only annual. You can reuse due diligence statements that you've produced if you're importing the same product over and over again. So they're simplifying a lot of this in a great way. And we will not know until probably the end of this year what the actual final outcome is. Another area which nobody really talks about, and this is my last slide, is this whole area of taxonomies and digital sustainability reporting. You will notice that all of the different standard setters have come up with taxonomies, okay? And what is a taxonomy? It's basically a structured system that classifies and labels data. So you have so many data points and you put them, you can see them on Excel spreadsheets, or they can be in a digital format such as XP or L. So GRI and ESRS, EFRAG and ISSB have all come up with taxonomies, and the digital format that they are using is XBRL, and this is called the Extensible Business Reporting Language. Now, it's really important because this is what is used for financial statement reporting, and it's been used for maybe 15 years globally. Malaysia, we haven't really used digital reporting as such, but you will notice in my yellow box here at the bottom, the Companies Commission of Malaysia has just introduced the Malaysian Business Reporting System last year in September. And it's mandatory for all of those who are submitting annual reports and financial statements, okay? And they're using XBRL. So I think it's a matter of time because internationally, now countries are moving towards using XBRL for sustainability reporting. And the reason why we do this is because traditional PDFs are actually quite hard to analyze. If we're talking about investors and regulators and other stakeholders, comparing, maybe 200 reports becomes very problematic if we're doing it using PDF. So in this case, it's a really great way of enabling automation and validation and comparability, especially when we use these data points and then we can compare them across different reports. So I think it's a matter of time. I mean, we're only introducing this in Malaysia for financial reporting, but it will move eventually to sustainability reporting. Once companies are familiar with it for financial statement reporting, it will be quite easy for them then to adopt it for sustainability reporting. And I think that's the direction that we are going globally. So I'm going to wrap it up. I'm sorry I went through all of those quite quickly because I don't have much time, and I'm just giving you a flavor of what's happening in the sustainability reporting landscape right now. So I'm going to hand you over to Pratap as he talks about some of our upcoming programs. Thank you, Pratap.
Well, thank you, Anne, for the presentation. It is quite an extensive range of subtopics that Anne has covered, and I'm sure you all have many questions to ask, especially pertaining to the NRSF and also what's happening with the European Union with the Omnibus Simplification Package. And as well as what kind of impact the climate first approach that the Securities Commission has actually articulated for listed entities in Group 1 and Group 2, and also non-listed companies who would be placed in Group 3. And also there are many SMEs as well for operating in Malaysia who may be wondering whether they are supposed to be reporting on this or not, because the regulators, namely even the central bank, is very well aware of the need for sustainable reporting pertaining to sustainability finance. So we will start by inviting. Can I request someone to please mute yourself?
Apa lagi kita punya ni ah?
Can I request participants just a friendly reminder, if you can mute your microphones, really be appreciated. So my priority right now is to make sure that your questions are answered. So please use the Q&A tab to post your questions. While we wait for your questions, maybe let me just ask Anne to address the elephant in the room by making sure that all of you are aware, so as to start the ball rolling. And can you just give us your insight? I think there are a lot of people I have heard in my engagements with clients and also non-clients as well. They've always made this statement that they are transitioning from GRI into IFRS. Now, your slide on the double maturity is particularly interesting. Can you give us your thoughts on that, whether companies should move away from GRI to start reporting on IFRS? And if we have already started working on GRI reporting, should we give up or abandon GRI and just move straight into IFRS reporting format? What are your thoughts?
Yeah, I mean, that is a fantastic question. And I've also heard some similar comments. The reality is that when IFRS S1 and S2 was first produced, it's got a much narrower focus than normal, GRI or even ESRS. It's focused very much on what the financial accountants would say are the primary users of information. And we use this in financial reporting. In the conceptual framework, we talk about the primary users of general purpose financial reports, and that's the investors, the creditors, and the lenders. So this approach has been adopted in sustainability reporting as well by IFRS. So it's very much focusing on the financial impacts of ESG topics on the company's bottom line, on their cash flow statement, as well as on their assets and liabilities. So when we talk about this from an IFRS perspective, it's basically a baseline. It's a starting point. So if we're starting off sustainability reporting, we've never done sustainability reporting before, by all means start with IFRS, because obviously as a company you want to know what are the financial impacts. But if you've already been doing sustainability reporting, which main board companies and ACE market companies have been doing, and you've been using BRSA, for example, the BRSA guidelines are very closely aligned to GRI, then you're already reporting on the impacts on the environment and on society and on the economy and so on. So what you should really be doing is continuing that, but then looking at those impacts and seeing what are the risks, and opportunities that may have an impact on your financial statements. Because when you think about it, sustainability reporting is not short-term. It is a long-term thing. Sustainability reporting, we should be looking at the short-term, medium-term, and long-term. And often the impacts, for example, if I'm a property developer and I have impact on biodiversity, I may not be able to quantify that now, but I may be able to see the ramifications for my cash flow or for my profit and loss account 5 years from now or 10 years from now. So many of the impacts that we see in impact reporting will have some sort of financial fallout, as it were. Okay, so it's important that to get a comprehensive picture or a complete picture of sustainability reporting, we should be looking at both. And this is why GRI and ISB are working very closely together. They've been doing this since 2022 when they signed a memorandum of understanding. They've been working on this closely now going forward. We will see that GRI has come up with GRI 101, which looks at biodiversity, and the next standards that ISSB are coming out with will be looking at biodiversity, I think, followed by human capital. So this idea of equivalence becomes very important. Impact reporting and financial impact. I hope I've answered that question.
Yeah, thanks, Ed. Let me just ask a follow-up question, because, sorry, you're speaking a little bit too fast. I hope the participants manage to get what you're trying to say. Just to be a little bit more direct, if an SME who has not done reporting at all, what and how should they start? Should they use GRI or should they use IFRS? If that's one, an SME which is based in Malaysia. What if I'm a large as a non-listed company above 2 billion? So should I start with GRI or should I start with IFRS? Your thoughts on this?
Well, IFRS is a regulatory requirement. I mean, that's a requirement by the authorities. GRI is voluntary reporting. But if you're just going to use IFRS, at the moment, we only have a climate change standard. We don't really have any other ESG topic related standards. So GRI is much more comprehensive to get you started. If you're really serious, and if you're a large company with a 2 billion or more revenue, then you need to be very serious about this. It's likely you are exporting, you're dealing with other jurisdictions and so on. So GRI is a much more comprehensive set of standards. I mean, for example, we have 32 ESG topic standards. We have already got 4, going on to have 8. Eventually, we have 8 this year, early next year, 8 sector standards. So, and it has a very clear process for you to follow in the identification of what topics you should be reporting on. In fact, if you use GRI along with IFRS, you will be doing something similar to what is being done in the European Union with ESRSs, where they're using W materiality, i.e. looking at impacts and also looking at risks and opportunities and bringing it all together in an embedded report.
Okay, thanks, Anne. That's quite clear. Let me just take it another step further. If I'm a Malaysian company and I'm exporting to the EU and they have the ESRS standard, and if I have been reporting using GRI, would it be sufficient to pass through the ESRS requirements from the EU?
Yeah, if your importer in the EU wants to see your ESG reporting and so on, the wonderful thing about GRI and ESRS is what we call...
if you get a bill, you will be asked to do a reviral. So you still get a chance.
Please turn off your mic, please. Thank you. The wonderful thing about GRI and ESRS, in fact, when they were developing ESRS, is GRI help them to develop the 12 standards under ESRS. They work very closely with EFRAG. And in fact, we say that the standards are highly interoperable. So if you're using GRI, it is very likely that you don't have to add on very much more in order to satisfy, whoever the importer is in the European Union. Yes, because of this high interoperability between standards.
Okay, so basically, if I use GRI, it will comply with ESRS. Is that what you're saying?
There may be some specific information because we have to remember that ESRS is also based, based on regulation. GRI is a voluntary standard, not based on regulation. And there are some components in ESRS which are based on laws in those specific countries that you are reporting to. So there may be some additional things that they may ask you for. But generally, it's probably about 95% of it will be compliant, yes.
Okay, thank you. There is one question here from Nurul Mazlina. Her question is, if carbon tax is implemented and carbon credits could only be used up to 5%, how about the RECs?
Well, renewable energy certificates are a way of basically you're just saying that your energy is not coming from fossil fuel, it's coming from solar or all of those, renewable energy sources. So if it's coming from the renewable energy sources, then Scope 2 will be reduced substantially. I mean, if you've got some still from fossil fuel, then Scope 2 emissions could end up being eliminated if it's all from solar power. So yes, that will be one way of reducing your emissions, but RECs are not the same as carbon credits, okay? And I think we have to be careful about conflating both of them. RECs is just basically, buying energy from our utility provider, i.e. TNB, and their TNB is telling you the source of this energy is coming from a renewable source, therefore there's no emissions as a result. Whereas carbon credits is talking about buying credits from a project that is removing GHG or reducing GHG. It could be methane capture, it could be biomass, it could be so many different things, and you're normally going to be buying those credits. You could be buying them from an international market, or you could be buying them from Bursa for offsetting purposes. I hope that has answered your question.
Yeah, Nurul, I hope you've understood the response. If any of you got any additional questions, please post in the chat, or you can also put it in the Q&A. There's another question here from Mr. Damien Santosh. His question is, given the growing momentum towards harmonizing sustainability reporting frameworks, is there a possibility of convergence between GRI and ISSB standards in the near future? Will the two continue to evolve in parallel to serve their distinct audiences of stakeholders and investors?
That is a wonderful question, Damien, because I think most report preparers and report users would like to see probably more standardization in sustainability reporting. But I think we have to remember that IFRS is under the accounting profession. Of course, their main stakeholders that they will focus on will be primary users, which will be investors, creditors, and lenders. And the focus will obviously be very financial related, because they want to make sure that investors have that kind of information, useful information to make decisions about how they are going to invest and so on, or whether they're going to lend money to the reporter or not. But of course, we all know that sustainable development is much wider than looking at financial aspects. So from a national point of view, when we look at countries, we talk about the United Nations Sustainable Development Goals, the 17 goals. So as corporates are a big part of that equation in contributing towards the Sustainable Development Goals. So of course, corporates, not only can they contribute to advance the UN SDGs, but they're also part of the problem. They're part of the solution, they're part of the problem. And part of the problem is that corporates do have an impact on the environment. I mean, they make use of ecosystems, for example. They may be involved in certain adverse consequences on, the environment, on society. We've seen here in Malaysia, for example, issues with regard to forced labor and human rights issues. We've seen issues with, pollution incidences, occupational health and safety incidences, and so on. So there are adverse impacts. So we have to also think about the other side of the equation. We cannot just look at it from a company's perspective and just look at it from an investor's perspective. We also have to think about the impacts on the society, on the environment, if we are really genuinely going to contribute towards achieving the UN SDGs. So it's important that we have both. And I think this is why it's good that GRI and ISSB are working together. GRI, I believe, this is my own personal opinion, the GRI will not be taken over by anybody. I mean, they've been around since 1997, and the idea is they are voluntary. I mean, they're funded by voluntary organizations, and their idea is that they want to be an organization that is helping companies to report on their impacts on the environment and on society. So we need both, okay? So, but hopefully they will work more closely together and do this exercise of equivalence so that there won't be duplication, because some of the work that GRI comes up with, for example, on the GHG emissions standard, I mean, it's also in IFRS S2. IFRS 2 talks about transition planning. You know, they've already taken over the transition planning task force and all their guidance and so on. GRI 102 also talks about transition planning. So, of course, if they work closely together, one is focusing on impact and wider stakeholders. The other one is focusing on financial impact and a more tight group of stakeholders, i.e. investors, creditors and lenders. But if they work together, I think they can achieve a lot in coming up with, complementary approach to sustainability reporting, and very similar to what is happening in the European Union. As I said to you before, in the European Union, they are using ESRS, that's the European Sustainability Reporting Standards. There is only 12 of them. But if you look at the ESRSs, they look at both outward impact and they also look at inward impact. So if you look at each of the ESRSs, they want companies to report on their impacts on the environment, their impacts on society. They're even looking at, for example, impacts on supply chain. There's one in there looking at the labor force and so on. And they also look at the risks and opportunities associated with those impacts that might have financial consequences on their performance and position of the company itself. So to bring everything together. So I think using GRI, and this is the way the world is going, this is the way the world is going. It is not enough. If we look at Singapore, for example, they've also, when you look at the stock exchange, they've also said about using GRI to complement IFRS. So GRI is not going away. I hope that's answered your question, Damien.
Okay, thanks. Thanks.
Yes, thank you.
May I just request all of you, if you have any further questions, please use the Q&A tab. We should be ending this webinar in about 5 minutes, so this is your last chance to actually post some questions. And I just want to add to what Anne has said about the GRI and ISSB. We need to understand that the National Sustainability Reporting Framework is basically a climate-first approach. Basically, they are focusing a lot more on climate change. And GRI is a lot more broader and includes various other aspects such as human rights, the SDGs, and so on. So one of the important things to understand is that companies should also manage their sustainability risk. As you know, many of Malaysian companies have gotten into a little bit of a tangle in the European Union and also in the US market because of alleged human rights violations or abuses. So we need to take a very broad picture in what we do about sustainability reporting. We have a question, and probably, I'm not sure, this could be the last question for today. If we have time, we will take one more question. But Gaman Chow asked this. I'm trying to understand what he's asking over here. His question is, what is the flow of reporting? And I think he's asking, what is the process for sustainability reporting? Collect data, reporting the data according to standards, advertise on web page. Does it need to get certified? I think basically it's asking what is the process for sustainability reporting and whether it needs to get, where do you publish the sustainability report and whether you need to get it assured.
Yeah, okay, thank you for that question. If you have never done sustainability reporting before, you're starting off on this journey. One thing I will say to you is that you already are doing a lot of things where they are ESG related or they're sustainability related, because in Malaysia, as even smaller companies, you have to comply with various legislation. So, for example, you have to comply with labor practice, labor laws, occupational health and safety, all of these environmental laws and so on. So by complying with all of these, you're already doing some sort of ESG practice already. So starting off on your ESG journey, one of the first things you really need to do is see where are we now? What are we reporting on? What laws do we have to comply with? What kind of data do we have? And then you have to determine what topics should we be reporting on. Every company, if you, for example, were to get all of your heads of department in a room and ask them which of the sustainability topics are the most important to this company, you will probably come up with a whole host of different answers. So, and normally we go through this exercise, it's called a materiality assessment process. So, a company could come up with 50 different topics, and there's no way you're going to report on 50 different topics. So you have to go through a process of identifying which of those are significant from the point of view of the company. Now, if you're using IFRS, you're going to look at them from the point of view, do they have a material financial impact? And then if you're looking at it from the point of GRI, you're talking about, is it significant in terms of scale and scope, and, can we make it right if something goes wrong? Then once you narrow down, you need to prioritize and narrow down. So most companies should only be reporting on something like 10 or 15 topics. If you see a company reporting on 25 topics, I think it's overkill. Nobody's going to read all of that. Once you identify what topics you're going to report on, you also have to consider which standards am I going to follow? Am I going to use with reference to GRI as well as IFRS, or if I'm a very small company, I might decide to use, for example, the SEDG. Or if I'm an exporting company in manufacturing, I'm not listed, I might decide to use METI has the ESG, which incidentally are all very closely aligned to GRI. In fact, they're like watered down versions of GRI. So then once you do that, you decide which topics, and then of course you can just use the topic standards to guide you as to what you should report on or what you should be disclosing. And of course, where do you report this information? You may have a standalone sustainability report. Some people call it an ESG report, or you may include it as part, if you are publishing, if you're a small unlisted company, you're probably not publishing an annual report. Maybe you're doing this for the purposes of, an overseas customer or whatever, then you can just have a simple standalone report. It doesn't have to be very long. We have had clients who are SMEs who have actually produced their own report after going through training. Then they all went back, and the heads of departments have come up with their own ESG reports following that process. And that's the wonderful thing about GRI. It does have a methodology to follow. And one of the things about GRI, many people think, oh, GRI is too big, it's too long, it's just too much information, therefore it doesn't apply to a small company. That's erroneous, because you have two ways of approaching GRI. One is for smaller organizations, it's called with reference to, the other one is in accordance with. With reference to means you can basically choose whatever parts are useful to you for reporting. You do not have to adopt the full-blown standards as such, unlike a very large company that would use in accordance with. So GRI can be a very useful tool if you adopt the with reference approach to give you that process, to give you that methodology to follow. I hope I've answered the question.
Yeah, and we have two questions, but unfortunately we don't have much time. We have one question here on sustainability reporting, but maybe just to wrap it up, maybe just one question here from Benjamin Kim. Can you give a short answer to this, because we have only 1 more minute left on our webinar. The question from Benjamin is, there are various reporting standards on sustainability. Moving forward, will Bursa and or Malaysian regulators pursuant to NSRF move towards to focus on one reporting standard merged and used across all PLCs?
A great question, and I think this PowerPoint that I just show you here, as I just said, I think the emphasis will be only on IFRS and GRI because they complement one another. IFRS is focusing on financial, GRI is focusing on impact. So by using those two, we'll have a very comprehensive feature. I do not believe, maybe in years to come, but I think it's very, very far away, that there could be standardized reporting if we did something like the European Union and came up with standards similar to ESRS, where they cover both impact as well as financial risks and opportunities. But I think at the moment, that's not in the offing. I do know that the regulators have trained quite a number of the accountants on GRI. And also there's training going on IFRS. So these are the two that are the focus at the moment.
Yeah. Okay. Thank you, Anne. I just want to add that I think looking at both IFRS and GRI, companies should use both and possibly even consider using the UN SDGs. And so reporting various other standards. So it's not just like using one framework or a standard for reporting. The more, the better, because transparency is the basis of sustainability reporting. So we want to disclose as much information as possible in terms of sustainability achievements by various entities. I have two more questions, but I guess I will take online. I noticed Gloria's put up a hand for a while, but unfortunately we have overshot our time. It's now 1 minute past 11. And I also see from Miss Loga some questions. And these questions are very important, but we will take it offline if it is okay for both of you. And Gloria, you're more than welcome to contact us, and we can help to answer some of your questions. Just before we leave, can you go to the last slide, Anne?
Yeah, sure.
Just before we leave, I just want to just let you all know, some of you would want to attend the GRI training. You are more than welcome to join us in August 19 to 22 in Kuala Lumpur, and is fully claimable under HRDC. One of the things that you will learn from this, apart from learning a systematic way of sustainability reporting, most of the questions that you asked today will be answered during the training program. And I think the best thing that usually happens during our training programs is the opportunity to network with various other companies. You make new friends, you network with them, and you also share your experience and knowledge in terms of sustainability reporting, and that's really, really valuable. And I think in a short while, we'll also be announcing our GRI alumni networking group. And I would like to invite all our participants who have gone through our training program to join us for networking and also knowledge sharing as well. Okay, so please don't be a stranger. Please contact us. Tamias is here to help you. You can contact her with any further questions that you have. We'll be more than happy to engage with you and to respond to all your questions. Meanwhile, here's me wishing you from ESG Right a wonderful Tuesday. Have a great and productive day ahead. Thank you very much. We will stay online for a couple of minutes and then we will close this channel.
Thank you, Mr. Pratap. Thank you, Ms. N.
Thank you, everyone.
Thank you.
we can close in about 30 seconds from now. We will exit them. I'll just stay online to respond to some messages.